a more in detail look at Great British Pound and Australian dollar. So although on the higher time frame, I'm fairly bullish. Like I genuinely am. I could be wrong, but like on the 3 months, on the quarterly, we're in a daily fair value gap. We're in a fair value gap, and you'd still anticipate price to come up here, but this would be more of a lower time frame. And although it's not that low of a time frame, but you're still just looking for price to sort of just come back into this weekly fair value gap. So that's still your draw. You know, you're taking out your external. You're looking at the higher time frame internal on the weekly. So like, how are we going to get there on the lower time frame? How are we going to come down to the weekly on the lower time frame? So right now we're in a daily fair value gap, um, and although it's not in, although we're still in a huge discount, you might want it to come back up here. But the only confidence that I have that this daily fair value gap will be respected, and we're still seeking this one, this sell side liquidity, and still into this weekly fair value gap, is because Great British Pound against the Australian dollar is weaker than the Euro Australian dollar. So we can see that on a few of the lower time frames. So sterling is here. So we have SMT, whilst Euro has come into the premium, into the discount. Yeah, whatever. Uh, on the highs, on sterling versus Australian dollar, we've made lower highs. So Euro here. Why the hell it takes so long? Okay, yeah. So obviously you can see here how. Let's try and get this a bit nicer. So the the euro has made a higher high here, whilst sterling has made a lower high. So you can tell that the sterling is a weaker asset, and we've also made some more SMT, which is, again, it gives you like you're stacking the probabilities of which one's going to make the greater move downwards, because in the higher time frame we're still looking to seek external range liquidity from internal right here. So SMT again here, more evidence for a weaker asset. We have an order block which is already drawn out. So let's just get rid of euro now. So we've obviously just established that euro is stronger than sterling. So sterling is weaker, and the drawn liquidity is lower. So we're going to focus on the weaker asset for maybe like a greater move down. So let's just get rid of euro, focus on sterling. Laptop's working overtime. It's heating up. So, whilst we have this SMT here, because euro has taken this high, sterling isn't going to come back up to this high. So you basically come from the daily. You have an hourly SMT here. So this is almost like this is your protected high, because euro has already taken that high. So this is basically, yeah, you're going to be shorting from here. So you go onto the lower time frame. We had a news event here, which caused a huge move down, leaving. So in the last video, I said you could probably get a short here. I set a limit at the inversion. And I've got in here. So that was a limit order taken. I'm seeking this sell side liquidity, but I'm probably going to most likely take profit down here. I will probably end up closing at this low, I must admit. But if I figured out how to leave rudders on MT5, I'd probably leave some on. But fuck knows how to do that right now. But either way, just to put this into perspective, my high is above this high because again it's protected. Let's just say, for example, you put your profit here. sign in from here essentially. Painful. Fuck me. It's actually painful. Gosh. What is this lag? Ping 22. Alright, so this is what we're looking at. And it's probably going to be closed in a couple of minutes. But yeah, this is what we got, boys.